financial securities of long-term nature, which have a maturity period of more than 1 year. Whereas money market is a marketplace for dealing in financial securities, having a short-term life, that is short-term maturity period of less than 1 year. And coming to the concept of capital market is again subclassified into three broad categories. They are industrial securities market, gilt-edged securities market, or you can call them as government securities market. And the third category is long-term loans market. We have already discussed in detail about these concepts yesterday. Yes?
Yes, ma'am.
Now we'll proceed with the second aspect, that is money market. As we have already learned the meaning of money market, that it is a marketplace where financial securities in the sense, it can be a share, it can be a bond, it can be a debenture, it can be currency, or it can be any kind of financial commodity, where all these financial securities which have a maturity period of or life of less than 1 year are purchased and sold on the floor of money market, in the money market. And this money market is subclassified into many categories. For today's class, we have taken 4 important concepts, that is call money market, commercial bill market, treasury bill market, and short-term loan market. Now let us learn each of them individually. Call money market. As the name itself is indicating, call money market. That means it is a money market where you can give the loan you can lend the loan on a call, you can recover the loan on a call. That means it is a marketplace it is a market where the loans are lent for a very, very short period of time. That is for a maximum period of 14 days. That means within 14 days, the one who have taken that loan has to recover or has to repay it. That means 14 days is the maximum time limit which has been given to the borrower for repayment. So this call money market is highly liquid market. That means as and when you need, you can immediately convert into cash, or you have to immediately, you can lend or you can borrow within a short span of time. Generally, this call money market is advantage is being taken by commercial banks. Suppose one bank, one branch of SBI is falling short of cash in Tarnaka branch. It can opt for call money lending from an SBI branch of some, what do you call, Uppal or LB Nagar or somewhere. That means the closest branches they prefer to take. Or else you can opt for another commercial bank where you can borrow the loan for a 14 days period. That means you can take a loan and the repayment period for paying that loan is 14 days. Such kind of market where very short-term loans are being lent, you call it as call money market. ఎంత time period ఉంటుందమ్మా దీనికి? Repayment period is
14 days.
14 days. You understood the meaning?
Yes, ma'am.
Now we'll move to the next one, commercial bill market. Now this commercial bill market is deals with genuine trade transactions. Generally, this bill market is applicable for a seller who is selling the goods on credit basis. When a seller sells the goods on credit basis to the customer, that means the buyer is not ready to pay the cash immediately. So the seller draws a bill on the buyer, stating that I have sold this much worth of goods to so and so X, and this is the price, and the repayment period, it can be 1 month, 2 months, or 3 months. Basing on the strongness of that financial deal, you can make the bill. ఒక బిల్ ఆఫ్ ఎక్స్చేంజ్ డ్రా చేస్తారు అండ్ దట్ బిల్ ఆఫ్ ఎక్స్చేంజ్ విల్ బి accepted by the buyer. That means he gave his acceptance for that bill. Now, within a period of 3 months, the maturity period, take for example, you take the example that maturity period of that bill is 3 months. And within these 3 months, if any point of time the seller is in need of money and he want to convert that bill of exchange into cash, so what can he do is he can approach the nearest bill market or the nearest bank. He can submit that bill there, get it discounted with the bank, and convert that bill into cash. Later, bank will take the responsibility of collecting money from the buyer. So this kind of what do you call facility is being given under the commercial bill market. Why? Because the seller accepted to draw a bill for 3 months. But who may know that within this 3 months, seller might be in urgent need of money. He might be looking for money immediately. So what he'll do, he'll immediately, he likes to convert that into cash. Now he tries to convert into cash and he wants to um, uh, get the money or liquidate the money immediately. Such kind of payment methodology where the bank accepts to discount the bill and give the payment. Actually, seller and bank does not have any contact. Buyer and bank does not have any contract. Actually, the deal is between seller and buyer. But here, this bank has accepted for this transaction. Why? Because suppose if the bill amount is of some 30,000 rupees, this seller went to the bank stating that it has 3 months maturity period, but I am in urgent need of money. So please get it discounted. That means what? If bank accepts that bill, bank will get a revenue of some 50 rupees or 100 rupees as a discount, because the bill total amount you will not going to give to the seller. That out of that 30,000, you may give only 29,900. That means that 100 rupees is a revenue that is generated by the bank in the form of discount. This is the benefit what the bank will derive by discounting the bills. So such a kind of facility is being given by the commercial banks and financial markets. This is what you call it as a commercial bill market. Am I clear?
Yes, ma'am.
Next, we'll move on to the third one, that is treasury bill market. It is again a very short-term bill market which is being issued by the government of our country. Generally state governments and sometimes even generally central government, even state governments will also deal in issuing of this treasury bills. Now it is a market where you can buy a bond which is issued by the government. It is actually not exactly a bond, it is a finance bill which is issued by the government. Now government has sold it to you for some money. That means your money is being saved in the form of treasury bill with the government. Later, whenever you need money or when out of your savings you kept with government, later whenever you are in need of money, you can approach the government. That is generally these treasury bills will have a maturity period of 90 days, 180 days, like that. Now, after the completion of that maturity period, if you are willing to continue, you may continue. Otherwise, you can give that treasury bill, return it to the concerned government and take back your money. This is also one of the kind of encouraging the savings from the common man, common individuals. And whenever they are in need of money, that means what government is doing, when it is in need of money, it will sell to you. Whenever you are in need of money, it will purchase from you. So it is going to play this seller and buyer role by dealing in treasury bill market. Now, what is the advantage that you derive with treasury bills is you are going to get a good amount of interest on this treasury bills. That means you have deposited your money with the government for 30 days, 90 days, 180 days like that. Sorry, 90 days, 180 days like that. So on that, you will generate the revenue. This is what you call it as treasury bill market. Then the fourth type of money market instrument is short-term loan market. These are the what do you call very short-term loans. Short-term means for a short period. These loans are generally lent to the business people who find it difficult to manage their working capital requirements. That means in business, everyday routine, what do you call, they need money for rotation, for paying the bills, for purchasing of stationery, or some for payment of salaries, rent, etc. Sometimes small business firms may find it difficult to maintain their working capital requirements. In such case, they can approach the commercial bank for short term loans. So commercial banks will lend them short term loans which have a maturity period of less than 1 year. That means whoever has borrowed this short term loan, they have to repay it to the commercial bank within a period of 1 year. So this is another type of instrument which is majorly been which is highly active in the money market. So am I clear with the money market instruments?
Yes, ma'am.
How many instruments are there in money market? There are
Two,
four
ma'am.
instruments. Whatever we have studied, that is called money market, commercial bill market. We discussed about treasury bills. We discussed about short-term loan market. Now, now we will move on to another important topic in financial market, that is stock exchange. Now, as we have studied that financial market is a place where all the securities are purchased and sold. All the securities are purchased and sold. Now the question is, where are we going to buy them? Where are we going to sell them? We cannot go to a vegetable market. We cannot go to a dairy farm, or we cannot go to any supermarket to buy and sell our securities. So you need a stipulated place, a refined platform to carry on this transactions. Such a platform where the securities are purchased and sold, that platform or that floor or that particular building or the premises or an organization where you are purchasing or selling your securities, you call it as stock exchange. So it is a stock exchange is a platform or it is a market place where all the listed securities are purchased and sold. Now the question is, what is the meaning of this listed securities? That means whichever the company, whether it is private company, public company, bank, financial institution, whoever it is, whichever the company, whoever wants to sell or buy their securities, they have to get their name registered on the in the register of stock exchange. That means your company name should get registered on the floor of stock exchange. Then your company will be listed in that. So that is what you call it as a listing. Listing means getting registered on the floor of stock exchange. Now, whichever the companies whose names are listed in the stock exchange, only such companies are allowed to are trading on the floor of stock exchange. అంటే ఏ కంపెనీ నేమ్ అయితే రిజిస్టర్ అయి ఉందో, ఎక్కడ రిజిస్టర్ అవ్వాలి? ఆన్ ది ఫ్లోర్ ఆఫ్ ఇన్ ద రిజిస్టర్ ఆఫ్ స్టాక్ ఎక్స్చేంజ్. స్టాక్ ఎక్స్చేంజ్ రిజిస్టర్ లో ఏ నేమ్ అయితే రిజిస్టర్ అయి ఉంటుందో, ఏ కంపెనీ అయితే, only such companies are allowed to trade on the floor of stock exchange. So that is the importance or the priority that the stock exchange is gaining. And nowadays, it is a booming market in the entire world, because earlier in the initial days, many of us were not aware of what actually stock exchange is, how to trade, and we were under an impression that it might be a lot of gambling or a lot of manipulations, fraud will take place in that market. But the one who is well versed, who is having a well-versed knowledge about the trading of securities, they are literally earning lot and lot of money. They are doubling their investments by purchasing the shares and other stocks on the floor of stock exchange. That is the importance what the stock exchange is gaining day by day. And because of that, there are many stock exchanges that have been set up in our country on the name of NSE, BSE, regional stock exchanges, etc. And out of this, the most familiar ones are NSE and BSE. NSE stands for National Stock Exchange, and BSE stands for Bombay Stock Exchange. These are these stock exchanges are the most leading predominant stock exchanges in our country. Am I clear with the introduction?
Yes, ma'am.
Now, the question is, what actually this stock exchange will do? It is a building, or it is an organization, or it is a premises, or it is a floor where all the company's securities will be purchased and sold. That is one. That is fine. But what actually it is going to work for, and what are the things that it is going to do, that we can study from the features of stock exchange. Now, as I said, it is a market where the securities are purchased and sold. Now, if you observe all the securities, that means the shares, the securities relating to bank, అది బ్యాంక్ అయినా అవ్వచ్చు, ఒక ఫైనాన్షియల్ ఇన్స్టిట్యూషన్ అవ్వచ్చు, it can be government, it can be state government, central government, it can be semi-government bodies, anybody. They have to get registered their company name or their organization name on the floor of stock exchange. Then they will be allowed to sell and buy their securities in the stock exchange. That means the first feature of stock exchange is it is a market for all securities. All the securities which are traded in the country are traded on the floor of stock exchange. Second thing, it deals in second-hand securities. That means that is the secondary market. So not only the fresh or new shares and debentures, but also the companies whose shares are already being sold out or purchased, they can also make or join or participate in the stock exchange for selling and buying of this. That means resale of shares or selling of second-hand securities is also allowed on the floor of stock exchange. Third and most important point is the stock exchange is going to regulate the trade in securities. What is this regulating? That means the stock exchange will never buy or sell the securities on its own name. That means it does not involve that means it is not buying for itself. It simply, what it will do, it will create a platform where the buyer of securities and the seller of securities can meet together. So what is it basically deals with? It is what do you call it? It is providing the infrastructure. It is providing all the facilities to all the listed companies and their members. Their members or their companies come with their executives, and they will find the brokers on the floor of stock exchange. So they'll make the deals or contacts with them, how the price should be started, what is the demand for the securities in the market. All these things will be regulated. That means it will not deal or buy or sell the goods for buy or sell the securities for itself. What it will do, it will regulate. That means it is showing us a way where to buy and where to sell, how to buy and how to sell. and it is providing all the facilities for buying and selling of the securities. That is what you call it as regulates the trade in securities. Second thing, as I said, it allows only listed securities. That means only the companies which have got registered on the floor of stock exchange are allowed to trade their securities on the floor of stock exchange. Then the another point, if you observe the fifth point, the transactions on the floor of stock exchange are affected only through the members. That means, as I said, stock exchange will not deal in itself. It will have a group of brokers. It will have its own members who are going to discuss with the outside parties. Outside parties means ఎవరైతే ఇన్వెస్టర్స్ వస్తున్నారో పర్చేస్ చేయడానికి అవ్వచ్చు, సేల్ చేయడానికి అవ్వచ్చు, whoever is entering into the floor of stock exchange to buy or sell the securities, they have to get connected to the brokers on the floor of stock exchange. That means they are the mediators or the agents through whom the stock exchange is going to operate its functions. Then a stock exchange is not a single person, or it is not a one-man show or one particular body. It is a group of people. It is an association of people who were registered and who got an what do you call authentic permission or permitted to deal in the securities of stock exchange. So these are the basic features of stock exchange or the characteristics of stock exchange. Now the question is, when we understand that the stock exchange is not a simple work, running a stock exchange, managing a stock exchange, or dealing in the securities of entire country is not a single hand work. That means whoever is buying and selling the securities on the floor of stock exchange, they come with a trust and with a confidence that there is one body behind stock exchange who is regulating or who is governing the functions of stock exchange. That means ఎవరో దీని వెనుక పెద్ద body ఉంది, a big body is there, a strong body is there who is going to regulate the activities of stock exchange. Such a body, you call it as SEBI. What do you call it? What do you call that body?
SEBI.
SEBI, that is Securities Exchange Board of India. Now, the Securities Exchange Board of India is one body which is going to regulate the activities of all stock exchanges in the country. Mana country lo unna stock exchanges ki rules and regulations frame cheyadam, criteria frame cheyadam, giving the directions, framing the guidelines, framing the norms, rules and regulations will be taken care by SEBI. SEBI is the authority or a body or an association of people who are going to frame the guidelines, directions for operating, functioning of all the stock exchanges in our country. Now, if you look at this, the governing body of stock exchange, the governing body of stock exchange consists of 13 members, of which 6 members are from the stock exchange and are elected by the members of the stock exchange. And that means who are there in this 13 members? 3 eminent personalities from central government who are well versed in the field of economics, finance and all. Such eminent personalities, 3 people will be there from central government, 3 from public representatives, 3 from SEBI nominates, and the executive director, one of the executive director will also be appointed to take care of the functioning of this stock exchange. So it consists of Overall, 13 members from different streams, different organizations. They are all well versed, very efficient in managing the or framing the regulations for working of stock exchange. Now, coming to the recognition of stock exchange, when this actually stock exchanges have come, from when they have taken up their work is, as I said, these stock exchanges were working as per the SEBI guidelines, that is Securities Exchange Board of India, and also as per the Securities Contract Regulation Act, SCRA. It stands for SCRA. This SCRA, Securities Contract Regulation Act 1956, frames the bylaws for regulating the duties functioning of all the stock exchanges in the country. Now here the question is, who can participate in stock exchange? What is the membership rules for stock exchange? That means to be a member of this stock exchange, you need to have certain qualification, not exactly qualification, you have to fulfill certain criteria. So first thing is, an individual who wants to be a member of stock exchange must be an Indian citizen who has attended the age of 21 years. That means he or she should not be less than the age of 21 years, and he or she should be must be an Indian citizen, and they should not have any background of involved in bankrupts or what do you call fraud or dishonest cases or any kind of legal issues in their history, or any kind of what do you call defaulters. They might have taken some loans in their life earlier, or were involved in some business issues where they felt as they stand as defaulters. Such people are not allowed to become the members of stock exchange. So it is very clear that a person who attended the age of 21 years and who is an Indian citizen, who does not have a history of bankruptcy or as a defaulter, only such person is allowed to become a member of this stock exchange. Am I clear?
Yes, ma'am.
Now let's move on to the next topic, that is types of stock exchanges. The main stock exchanges that are running in our country. Though there are many stock exchanges that are working in our country, of all them, the most prominent and the familiar ones are NSE and BSE. Now, NSE stands for National Stock Exchange. It is incorporated in the year 1992, where they deal in trading of the securities of equity and debt nature. That means they deal in shares, they deal in bonds, they deal in debentures also. And maximum number of securities that are sold or purchased or being marketed in our country are being sold out on the floor of are being what do you call traded, sorry, now are being traded on the floor of stock exchange. Now the credit that goes to stock exchanges, this national stock exchanges, it is one of the first stock exchange which is uh, uh, what do you call established or set up in our country with modern based setup, that is fully automated screen based. That means what are the list of companies that are trading, ఎలాంటి securities trade అవుతున్నాయి, what is the price, opening price, closing price, all this will be displayed on a what do you call, fully automated screen. So you can easily, by looking at that screen, you can know any companies participate చేస్తున్నాయి, how many securities are going to be purchased and sold. All that updates you will be getting on a automated, fully automated screen-based trading system. This is the first, what do you call, stock exchange where the what do you call, introduction of this automated screen-based trading system was introduced. Now, the reason behind is to keep it more transparent to the companies or to the participants. So the participant should not see that something inside trading is going on in the stock exchange, or the brokers are manipulating them, or some kind of fraud is going on. No, to keep everything very, very transparent, and to speed up the what do you call, transactions every day, and to show that everything is being carried out very efficiently and effectively, this screen-based system is of training is being introduced there, and it is very advantageous, very useful, and very what do you call, user-friendly system also. So this is what the credit goes to NSE, National Stock Exchange. Then we'll move on to the next one, that is Bombay Stock Exchange. This is more older than the NSE, because NSE was set up in 1992, whereas Bombay Stock Exchange is set up in the year 1875, the very, very oldest stock exchange in overall Asia. Now, out of the what do you call, all stock exchanges in Asian continent, this BSE stands in fifth place. Bombay Stock Exchange will stand in fifth place here. And it is the most leading stock exchange which has a largest number of scripts that are listed. That means many companies, more than the companies which are traded on the floor of NSE, more than that number is being traded or listed on the floor of Bombay Stock Exchange. And this is very, very, what do you call, dangerous stock exchange also, because participants or people are under an impression that it is a stock exchange where lot of fraud, manipulations will take place. Now, as I said, it is known as BSE Limited, Bombay Stock Exchange, oldest stock exchange in the entire Asia, and it is located in Dalal Street of Mumbai. It has largest number of companies of the world listed on it. Okay. Now, another important or credit goes to BSE is it is the first stock exchange which is being recognized by Government of India in the year of 1956. Then later, once the NSE has introduced this screen-based trading system, this in 1995, BSE has opted for electronic trading system, that is online trading system. What is this? Online trading platform was introduced by this Bombay Stock Exchange. That is about BSE. Then we'll go on to the another kind of stock exchange floor in our country, that is OTCEI. OTCEI refers to Over-the-Counter Exchange of India. What does it mean? Over the Counter Exchange of India. Bharti, are you with me?
Yes, ma'am. Over the count of exchange India.
Over the counter. You please take down the running notes, ma. When the class is going on, write down them. That's why I'm keeping the screen for a few seconds so that you will have the time to take down some important points.
Yes,
Important
ma'am.
points you can note down. Over the counter exchange of India. This is also a Mumbai based exchange. And this is the first exchange where all the small what do you call small companies, very few, very small companies securities are purchased and sold, and it is actually set up by UTI under the supporting hand of ICICI, Industrial Credit and Investment Corporation of India, and IDBI. All these industrial financial institutions and the development banks have set up this OTCEI. OTCEI is generally, uh, um, that means without the involvement of stock exchange, if you are buying and selling the securities out of the floor of stock exchange, it is called OTCEI, over the counter exchange in India. That means ekkada brokers lekunda, commission charges lekunda, without the involvement of those agents and all, where the buyer and seller directly coming together and dealing in securities market. It is a traditional kind of market where the involvement of stock exchange is not being encouraged here, where the buyer and seller generally come into direct contact, and they uh, directly involved in trading of their securities. Such an exchange, you call it as over the counter exchange of India. అర్థమైందమ్మా?
అర్థమైంది మ్యామ్.
Okay. Then we'll move on to some important points or concepts of stock exchange. Concepts of stock exchange. So we'll start with online trading. Online trading. What is this online trading? Now, trading means buying and selling of securities. Generally, on the floor of stock exchange, a buyer's broker will be there, seller's broker will be there. Seller's broker and buyer's broker will make a deal. Seller broker will find a buyer, buyer broker will find a seller. ఓకే, బయర్ కి కావాల్సింది ఎవరు? సెల్లర్ కావాలి. సెల్లర్ కి కావాల్సింది బయర్ కావాలి. సో దే విల్ బి ఫైండింగ్ దేర్ సెల్లర్స్ అండ్ బయర్స్. దే విల్ మేక్ ద డీల్. They will convey that about the process of trading the securities, which securities are mostly demanded in the market, which are having high boom, and what is the price. All this will be dealt by the brokers or the middlemen, whoever is engaged on the floor of stock exchange through the buyer and seller. That way it goes on. But most of the, in today's time, what's happening, people does not have time to do all this. So on their fingertips, by sitting at home, if somebody wants to buy and sell the securities, that facility is being introduced with the concept called online trading. That means in this online trading, you need not to go or visit the stock exchange located somewhere, ఎక్కడో హైదరాబాద్, బాంబేలోనో, ఇంకెక్కడో లొకేట్ అయి ఉన్న స్టాక్ ఎక్స్చేంజెస్ కి వెళ్ళి యూ నీడ్ నాట్ టు time, spend the time, money, all this, engage the brokers and all. You can simply go for a system called online trading system. It is basically an act of buying and selling the financial securities through online platform. Through online platform. Nowadays, many stock broking companies are coming up in the market. Carvey stock broking ani, Angel stock broking companies ani. Like this, many stock broking companies will come in the market. Their duty is to give you an internet based access to trade your securities on the floor of stock exchange. That means by sitting at your home, through an internet access on a forex platform, you can trade, you can buy or you can sell the securities. నువ్వు కొనొచ్చు, అమ్మొచ్చు. ఎక్కడికి? అక్కడ డైరెక్ట్ వెళ్ళాల్సిన అవసరం లేదు. సిట్టింగ్ at your home through the internet access, you will be given some what do you call this credentials for logging in. Once you get registered, once you become the member of them, they will be giving you the login credentials. Through them, you can log into it and you can operate or access your trading activities by through your laptop. Such system, you call it as online trading. Online trading is buying and selling of financial securities on online trading platform. Am I clear?
Yes, ma'am.
Then the next one is insider trading. Insider trading. Now, insider trading means where the managers or executives will be having all the confidential information relating to ఏ స్టాక్ కి ప్రైస్ అప్స్ అండ్ డౌన్స్ అవుతుంది, ఎంతకు పోతుంది అనే ఇన్ఫర్మేషన్ ఇన్సైడ్ వర్క్ చేసే ఎగ్జిక్యూటివ్స్ అందరికి తెలిసే ఉంటుంది. దే విల్ హ్యావ్ దట్ నాలెడ్జ్. whoever is working inside or the managers or executives, they they are very much aware about the dropping of price or rising of price, and which is more profitable or advisable to get invested and all. So generally this what this corporate people will do is, corporate individuals, what they do, they, instead of directly quoting the prices outside or uh, buying or selling them through the organized platform, they try to grab some confidential information relating to the securities, and whatever the information they got, they attempt the trading accordingly. That means లోపల నుండి తీసుకున్న ఇన్ఫర్మేషన్ ప్రకారం they'll be trying to do the trading from inside through the help of these executives or managers. Such a kind of trading, you call it as insider trading. అంటే in what do you call, అది మార్కెట్ లో బయటకి తెలియక ముందే దే విల్ గెట్ ద కాన్ఫిడెన్షియల్ ఇన్ఫర్మేషన్, దే విల్ పే సమ్ మనీ కమిషన్ టు ద ఎగ్జిక్యూటివ్స్, and they'll bribe them, and they'll try to get some confidential information relating to the securities, or they'll try to buy and sell the securities without the involvement of these stock market. You call it as insider trading. Basically, this insider trading is an illegal act of trading. Such kind of practice should not be encouraged, but people, for their own self advantages, or to grab some confidential information, or to skip the pay, or to avoid the brokerage or commission fees, percentages, and all, they try to go for insider trading, which is not an legal one, which is not advisable also. Okay. Then another concept is short selling. Short selling. Short selling means if a trader is selling some securities at a low price with an intention of repurchasing them at a later date. Ante ee roju today he's in need of money. So what he is doing, he is selling, he wants to sell some of his shares comparatively lesser than that is there in the market. Ante market price కన్నా తక్కువగా అమ్మనీకి రెడీ అవుతున్నాడు. Why? Because his intention is, if I sell it today and fix with the dealer or with the buyer, that I am going to repurchase them after a certain period of time. That kind of agreement or an understanding made between the buyer and seller, you call it as short selling in trade. Short selling means you are selling your securities already, దాన్ని కొని పెట్టుకున్నావు. Now you want to sell them. At what rate you are selling? Market లో ఉన్న దానికన్నా తక్కువ రేట్ కి అమ్ముతున్నావు. You are selling at a lower price than that is there in the market. Why? With an intention of buying them at a later date. Buying them at a later date. With an expectation that ఇంకా ఫ్యూచర్ లో ఇంకా తగ్గుతుందేమో ప్రైస్ కి, అప్పుడు ఇంకా తక్కువకి కొందాము అనే ఇంటెన్షన్ తోటి టుడే యు ఆర్ సెల్లింగ్ దెమ్ అట్ అ లో కాస్ట్. దట్ ఈస్ వాట్ యు కాల్ ఇట్ యాజ్ షార్ట్ సెల్లింగ్ ఆన్ ద ఫ్లోర్ ఆఫ్ స్టాక్ ఎక్స్చేంజ్. Am I clear?
Yes, ma'am.
Then another important thing is stock brokers. As I said, in order to operate or make the function or these trades properly on the floor of stock exchange, we need a group of people to work or execute these activities. All those people or members or individuals who are engaged in doing the work of buying and selling of the securities on the floor of stock exchange, you call them as brokers. So generally, these brokers are the registered representatives. That means to act as a broker, they should have they get their name registered, and they should fulfill certain criteria, conditions, qualification of certain requirements specified by the stock exchange. They have to fulfill them, and they'll be given and the registration ID to act as a broker of the stock exchange. These brokers are generally working on the floor of stock exchange for a brokerage. అంటే ఆ బ్రోకర్స్ కి వాట్ ఎవర్ ద కమిషన్ దట్ వీఆర్ పేయింగ్ టు ద బ్రోకర్స్, we call it as brokerage. And their duty is to see who the buyer is, who the seller is, and to make them meet on a certain point, to make the agreement, to make all the paperwork that is required for the purchasing and selling of the securities. All that background work will be taken care by this brokers. You call them as stock brokers. They are commercial people who are working for a paid brokerage అంటే కమిషన్ కోసం వర్క్ చేస్తూ ఉంటారు అనమాట. Then the another term of stock exchange you have to learn is speculation. Speculation means predicting something for the future and acting. అంటే you may think in a way, and suppose today the gold price is some 60,000 for every 10 grams. So you have two different opinions in your mind. You may speculate that in future next 1 month 2 months low gold price increase అవుతుంది. There is a chance that the price of gold may increase. So with that intention, what you are doing, you are buying it today and you want to sell it when the price is going to rise in the market. Are you able to follow, Bharti?
Yes, ma'am.
ఈ రోజు తక్కువ రేట్ ఉంది అనే అజంప్షన్ తో కొంటున్నావు, and you are going to sell it in the market when the price is high. Or else you may think in another way that no, today the price is very high. 60,000 is a very costly, for very huge amount on 10 grams. That you might be under an impression that the future in future it may reduce. So today you will postpone your buying aspect and you want to buy it only when the price is going to fall down. అంటే నువ్వు ప్రెడిక్ట్ చేస్తున్నావు, ఇట్ మే హ్యాపెన్ లైక్ దిస్, ఇట్ మే ఆర్ మే నాట్ హ్యాపెన్, దట్ ఈస్ సెకండరీ. ఇట్ మే హ్యాపెన్ లైక్ దిస్. సో యూ మే థింక్ ఇన్ అ పాజిటివ్ వే, యూ మే థింక్ ఇన్ అ negative way. And when it comes to speculation on the securities market, what happens is a trader thinks that what a trader will do is he is going to buy the securities when the prices are very low. అంటే ఈ రోజు కొనిపెట్టుకుంటాడు, ఈ రోజు ప్రైసెస్ తక్కువ ఉన్నాయి అనుకో, ఈ రోజు he will buy today he will buy them at a low price and he will be ready to sell it in the future at a higher price when the price will increase. అంటే ఈ రోజు కొని పెట్టేసుకొని ఎప్పుడైతే రేట్ మార్కెట్ లో పెరుగుతుందో అప్పుడు when the price increases he wants to sell down that in the market. So the difference between the buying and selling, uh, you call it as a speculation profit. Suppose you purchased 20 grams of gold today. 20 grams means some 1 lakh 25,000, 1 lakh 30,000 you paid, and you purchased some 20 grams of gold today. Because you are very well known that after a period of 1 month, the gold price is going to increase by more 10,000. So what you will do, you'll buy 20 grams for 1 lakh 25,000, keep it for you. Later, you will be observing, studying the market for 1 month. And suddenly you found one day that the price of gold has gone to 70,000 for every 10 grams. At what price you purchased? 60,000. When it was 60,000, you purchased 20 grams. So take, for example, 1 lakh 20,000. Now, when it has become 70,000, you want to sell it in the market for 1 lakh 40,000. 70,000 for every 10 grams means 20 grams you will sell it for 1 lakh 40,000. That means the difference between the purchase price and the selling price. Purchase price was 1 lakh 20,000. Sale price is 1 lakh 40,000. So the difference amount of 20,000, you call it as speculation profit. Am I clear?
Yes, ma'am.
This act of conducting, this method of conducting a financial transaction, that means you are risking your project. You are buying it at a price in a situation or during a period when the price is low, and selling it during the time when the price is high. So the difference or the difference amount between the purchase price and the sale price is called as speculation gain or speculation profit. Am I clear? This
Yes,
activity
ma'am.
you call it as speculation. Right. Hope I'm clear with all these terms of stock exchange.
Yes, ma'am.
Okay. We learned 4 important terms here. One is online trading, Jadukunam. What is insider trading? We learned about short selling in trade and about the stockbrokers and as well as the speculation. Now we'll move on to kinds of speculators. There are many types of brokers. We studied that without the brokers, you cannot run the stock exchange. That means you need the support of brokers to trade in securities. And there are many kinds of brokers who are working on the floor of stock exchange. So let us learn what are they. Kinds of speculators in stock exchange. Now, we'll start with the first one, jobber. Jobber is one of the member of a stock exchange who generally do the business of stock exchange or trading of stock exchange, trading of securities, buying and selling of securities in his own name. That means he is the one who directly takes the profit through the transaction. అంటే తన పేరు మీద కొనుక్కుంటాడు, తన పేరు మీద అమ్ముతూ ఉంటాడు. He buys on his own name and sells. He conducts the securities in his కొనడం కొంటూ ఉంటాడు, అమ్మడం కూడా తన పేరు మీదే డైరెక్ట్లీ అమ్ముతూ ఉంటాడు. ఎక్కడ? స్టాక్ ఎక్స్చేంజ్ లో he'll be doing this. He is one of the active member of stock exchange. Such a speculator or such kind of broker who is buying on his own name, at the same time తనే పేరు మీద కొనుక్కుంటూ ఉంటాడు, తన పేరు మీదే అమ్ముతూ ఉంటాడు. ఆ difference amount is the profit or the commission that goes to benefit that goes to the jobber here. So he is one of the active member of stock exchange. Then coming to the second category, that is broker. Now, these brokers generally, I said, they are the middlemen or the agents who are generally mediating, and oka mediator laga they'll be transacting the securities, or they'll be dealing and trading of securities on behalf of their clients. అంటే ఆన్ బిహాఫ్ ఆఫ్ బయర్, ఆన్ బిహాఫ్ ఆఫ్ సెల్లర్. బయర్ కి బయర్ బ్రోకర్ ఉంటాడు, సెల్లర్ విల్ హ్యావ్ ఎ సెల్లర్ బ్రోకర్. సో ఆన్ బిహాఫ్ ఆఫ్ దేర్ క్లయింట్స్ దే విల్ బి వర్కింగ్. సో ప్యూర్లీ దే ఆర్ లైక్ జస్ట్ మిడిల్ మెన్, ఒక ఒక ఎంప్లాయీ లాగా వర్క్ చేస్తుంటారు ఫర్ ద సేక్ ఆఫ్ సమ్ కమిషన్. Now, third category is bull. Now, bull is a kind of broker uh, who deals in trading of securities which is not of his own. అంటే తనకి కావాల్సింది అసలు somebody else he will take and he will sell for them. Actually, those securities does not belong to him. So what he'll do, he తనకు సంబంధించిన కాదు, అది తనది కాదు, it is of somebody else. So somebody else securities he is going to dispose them of, and he makes a profit of each transaction. Suppose if I want to sell my house, I cannot deal in selling off my house directly. So what I'll do, I'll engage a broker. I'll ask him to sell my house on behalf of me. Now he directly looks for clients, customers ని చూసుకుంటాడు. He is the one who searches for the buyers. He takes all the efforts, pains, work, everything. He'll do all the background work. What he'll do, he will sell the product, and out of the difference amount, he will take it as a profit. That means he may not give the total amount, whatever he sold to me. That means my house he sold for 50 lakhs, but he may give only 45 lakhs to me. That 5 lakhs amount is the profit goes to his pocket. Such person you call him as bulls. Am I clear? So he is going to sell the securities which he do not possess. అసలు ఆయన దగ్గర సెక్యూరిటీసే లేవు, వేరే వాళ్ళ సెక్యూరిటీస్ ని అమ్మి పెడుతున్నాడు. సో ఫర్ దట్ he is going to take the profit for the transactions he made. And the another and the most important one is lame duck. Lame duck. Now he's okay. Before going to lame duck, let us study another point and then we'll come back to this. Just keep this on hold. We'll go to what do you call? We'll study about the bear. We'll study about the stag. Then we'll come back to the lame duck here. Now, let's learn who is stag here. He is also a kind of speculator who purchases the shares of a new company, the company which has freshly come into the market, the new issue of shares. A genuine investor, he is going to purchase the shares as a genuine investor. He is not at all willing to become an actual shareholder of the company, but he purchases the shares to sell them above the value what he actually purchased. And that what he is doing is he'll buy the new shares of a new company that has initially come into the market. After buying, he generally is the one who buys the shares, you call them as shareholder. But this fellow does not want to act like a shareholder here. What he wants to keep those what do you call shares, and want to sell them in the market at a higher price. కొనేసి వెంటనే అమ్ముతూ ఉంటాడు మార్కెట్ లో. That category of broker, you call him as stag here. Am I clear?
Yes, ma'am.
Next. Contango. Contango. This actually is not required. So before this, you can write down one more point. Bear. We have studied about bull. I think I did not. I skipped to enter that bear in the topic. Anyway, we will discuss about him. BEAR, bear in stock market.
Okay.
Now, bear is a kind of stalker or a broker uh, who takes active part when the prices of all the stocks decline in the market and they continue to be falling down in the market for a longer period of time. You can write down a line. I'll just, he is an investor. You can simply write down. Bear is one who believes that a particular security
Okay.
particular security is headed downward and may attempt to he is headed downward. That means a particular security is continuously falling down its value in the market, and actually that falling down is to attempt a profit. అంటే ఏమనుకుంటాడు అంటే ఎంత తగ్గుతూ ఉంటే if the price is falling down, that means more number of investors will come to buy with an imagination that the price will rise all of a sudden in the future, or with some different pessimistic view. ఇప్పుడు తగ్గుతుంది అంటే ఎంత తగ్గితే అంత తక్కువ ప్రైస్ కి కొనేసుకొని later when it comes to a high price we can sell out in the market and make the profit. Such kind of thinker, such kind of pessimistic attitude, you call it as a bear. Bear is really pessimistic because their thinking, their understanding, their perspective view is entirely different. Bull ki bear ki అదే difference ఇక్కడ. Now, as I said, the Indian money market is regulated by SEBI and Securities Contract Regulation Act. One is SEBI, Securities Exchange Board of India, and the other one is Securities Contract Regulation Act. Okay. Now we'll move on to the, so am I clear? Am I clear with all the content of the stock exchange? Yes, ma?
Yes, ma'am.
We have studied about the meaning of stock exchange, participants or the speculators of stock exchange, various functions of stock exchange, types of stock exchange, and many other important concepts that are relevant to stock exchange. Now we'll move on to another interesting topic, that is monetary policy of India. Monetary policy of India. Now, many a times we will come across of certain situations in our day-to-day life. That is, practically we are seeing or observing that many a times all of a sudden we observe sudden hike in prices of all goods and services in the country. Vegetables prices పెరుగుతుంటాయి, domestic products prices పెరుగుతుంటాయి, groceries, all the prices are increasing. All of a sudden they increase in the market, and that trend continues for certain period. Okay, 2 months, 3 months, next 3 months, next 2 months, it will keep on continuing like that. That means all the prices will become, it looks very, very costly for us. Everything looks very expensive for us. And all of a sudden, suddenly the price start dropping down in the market. కొన్నిసార్లు continuously you will find that all the prices are reducing. The prices are reducing, and they are falling down in the market all of a sudden. Now, this kind of fluctuations in the market, you call them as inflation and deflation conditions. Inflation conditions means where the flow of where the I mean, as it's an indication that etla telusukovali inflation means you will observe that all the prices are going up. All the prices are going up in the market. They are going very high in the market. Okay. And deflation condition is where all of a sudden the economy will start dropping down. Slowly the prices are coming down. Everything looks like dull, unenergetic, and all. Such kind of fluctuations in the market are very common. And why this inflation and deflation conditions take place in the country? Why? Because when the flow of money is very high in the market, అంటే ఫ్లో ఆఫ్ మనీ అంటే ఎప్పుడైతే మనీ ఎక్కువగా సర్క్యులేట్ అవుతుందో, in the money is largely circulated in the country, and people are taking more and more loans, because commercial banks, their basic function is accepting deposits and lending loans. So they are busy engaged in lending loans, various types of loans to the customers, attracting them at a very lower rate of interest, charging a nominal rate of interest. They are lending loans to the customers, personal loans, home loans, consumer durable loans. They are busy in making their profits and getting engaged. Now, by this, what happens? People started taking the money, or borrowing the money, or using that money for unproductive things. And when more money we see, when money is less, we will try to use them properly. If we see that the money is more, where we will start spending them on unnecessary things. So unproductive things, spending on unproductive things will increase in the market. By this, what happened? The economy will get affected. Supply of money is more in the market, but the usage of money is very improper in the market. Now, when the country observes this, or basically the Reserve Bank of India, being the central bank of our country, their duty is to control the flow of money in the country. So what they do, they will try to hike the prices on all products. So when the prices of all consumer durable goods, groceries, vegetables, they increase in the market, then it sticks to the mind of individuals that no, we are spending the money on unnecessary things. So everything has become costly. Let us control spending of our money on unnecessary things. So by this, what happened? Your hands will get tightened. The flow of money from your hands will get controlled. That is one aspect. Second thing, deflation. Now, deflation is a situation where the prices are very low, and money is not there in the market. Money itself is not there. There is no question of buying it. So this way, inflation and deflation conditions are being controlled by the Reserve Bank of India, the Central Bank of India is going to control the flow of money in the market. Such controlling, you call it as monetary control system. What do you call it as? Monetary control system. Now, to control this condition, Reserve Bank of India applies various strategies on commercial banks because they cannot apply directly on the individual. Their weapon is commercial bank. So whatever the changes they want to bring in the country, that is possible only through commercial banks. So they apply certain strategies on commercial banks to control the flow of money. To increase the flow of money, they have certain strategies. At the same time, to reduce the flow of money in the country, they have certain strategies. Such kind of tendency of Reserve Bank of India, you call it as monetary policy. What do you call it as? Monetary policy. So it is basically a policy adopted by the Reserve Bank of India for the control of money supply and credit in our country through the help of, through the commercial bank. They cannot directly control or apply on individuals. So through the commercial banks, they want to frame this. Now, as I said, the objectives of monetary policies are to control the flow of money in the market, to see to it that the credit which is being given to the individuals is utilized for the productive purposes, which is used for the economic development of the country, and to avoid the unnecessary, unproductive spending of the customers. So this is how the objectives of monetary policies have been framed. Now let us look at what are the instruments through which the monetary policy is being controlled in the country. What are the instruments through which the monetary policy is being controlled in the country? The first weapon, what the RBI uses is, as I said, RBI cannot directly influence the individuals. It can influence the commercial banks through which individuals are going to get affected. So the first weapon what the RBI uses is the bank rate. What is this bank rate? Generally, whenever commercial banks are in need of money, they take the help of Reserve Bank of India. They take loan from Reserve Bank of India. The RBI will be giving them loans when they fall shortage of money. So whenever RBI is lending the loans to commercial banks, it is going to charge some interest on those banks. That rate of interest, you call it as bank rate. What is that? The bank rate is the rate of interest that is being charged by Reserve Bank of India on commercial banks. Whenever the commercial banks take a loan, they charge the bank interest on commercial banks. So the interest rate that is used by central bank as a charge on commercial banks while lending the loans to them, you call that rate as bank rate. Now, how the RBI using this bank rate is, suppose if Reserve Bank of India observes that commercial banks are very free-handedly, very liberally giving loans to common people, and it is so much engaged in, that means it is giving more and more money into the market through loans and all, it wants to control the commercial banks. So what it will do? To control commercial bank, it will increase the bank rate of bank rate. And interest rate pencheste emoutundi, when the bank rate is increased, commercial bank has to pay higher rate of interest to the central bank. Now when they are paying higher rate of interest to the central bank, first of all, they'll stop taking more money from the central bank. Okay. Second thing, what they do, when they are paying higher rate of interest to commercial bank, why will they charge less to the customers? They will also increase the rate of interest on the customers. So by this, what happened? because the customers are scared of those, afraid of taking loans at higher rates, they will stop taking the loans, or they will reduce the loans, taking the loans. By this, what happened? The flow of money will be controlled in the country. This is what, how the bank rate is being used by the Reserve Bank of India. Any doubts in this? Am I clear with this?
Yes, ma'am, clear.
Okay.
Yes, ma'am. Clear, ma'am.
Then the next one, next weapon of, next instrument of central bank is cash reserve ratio. Cash reserve ratio. Now, as we know, Reserve Bank of India is the central bank, the apex bank of our country. All the commercial banks has to work under the leadership, regulations, guidelines, instructions of the Central Bank of India. Now, every commercial bank has to keep certain amount of deposit with the Reserve Bank of India in the form of cash. Certain percentage of their deposits, వాళ్ళకి savings deposits, FDs ఇవన్నీ ఉంటాయి కదా. So whatever the deposits that they are getting, out of that, some percentage, that is 3%, 4%, 5%, 6%, whatever, it keeps on changing. CRR, bank rate, all these are not fixed one. They keep on fluctuating. So as per the norms of RBI, when the CRR is another instrument to control the money. How I tell you, when the flow of money is very high in the market, Reserve Banks observes that the commercial banks are giving more and more money to the, more and more credit to the people. So what it will do, it will increase the cash reserve ratio, CRR. What is CRR? This is the amount of deposits that the commercial bank has to keep with the RBI. Certain percentage, 3% out of their total deposits, 3%, 4% must be kept with the Reserve Bank of India. Now, if the Reserve Bank observes that the flow of money with commercial banks is very high, then immediately it increases the CRR. When the CRR increases means, nominal ga pettalsin danikana more amount they have to keep, more amount of cash they have to keep with the RBI. So when major portion of their cash is going to RBI, where is the chance of lending the loans to the customers easily by commercial banks? It will become tough. So this is how the money is being controlled by CRR, by Reserve Bank of India through the help of CRR. The same thing with SLR. SLR ante statutory liquidity ratio. That means apart from the cash reserves, all the commercial banks in the country, they have to keep certain reserves in the form of gold or in the form of government securities with the Reserve Bank of India. And వాళ్ళ దగ్గర ఉన్న commercial banks దగ్గర ఉన్న gold గాని securities గాని, they have to deposit certain percentage of SLR with the Reserve Bank of India. Now, when the flow of money is very liberal, or when the loans or lending criteria of commercial banks is very liberally going on in the country, to control the flow of money in the country, Reserve Bank of India will increase the SLR rate. By this, what happened? Majority of gold ornaments, gold metals, and other government securities of commercial banks will be deposited with the RBI. Will be deposited with the RBI, and when majority of their reserves are being diverted to RBI, commercial bank does not have more amount to lend or more reserves to lend. This is how their credit flow of money is being controlled in the market. At the same time, they will purchase also. They will reduce it. When the flow of money in the country is less, the percentages will be reduced. When the flow of money in the country is more, to control the commercial banks, they are going to increase the SLR rate, CRR rate, and bank rate. This tendency keeps on going with the RBI. The same with the open market operations. Open market operations, and these are the government securities which are generally purchased by Reserve Bank of India from commercial banks. Okay. Now, sorry, by commercial banks from RBI. Now, whenever they want to control the money, RBI will insist the commercial banks to purchase their securities. మా సెక్యూరిటీస్ కొనండి అని చెప్తుంది. Whenever they receive the instructions, they have to follow the order of RBI. They will purchase the securities. When they are going to purchase the securities, there is no money with the commercial banks to lend. That is how the money will be controlled. At the same time, suppose if the Reserve Bank of India observes that the money is very less in the country, more money has to flow in the country, what they will do? They'll instruct the commercial banks to sell the securities to RBI. So what they will do? Commercial banks will all commercial banks will sell their securities to RBI. By this, what happened? RBI will buy the securities and give the money to commercial banks. Now, commercial banks have a lot of money to lend them as loans. This is how the control is being accessed by Reserve Bank of India through open market operations. Open market operations, they are going to buy and sell the government securities as per the requirements of the country. Then the next one is repo rate. Repo rate, you call it as. Now, this is the rate at which the central bank is going to lend the money to the commercial banks. That means the rate of interest that they charge on commercial banks at the time of lending short-term loans to the commercial banks to control this credit availability, inflation conditions in the country. This is the rate what the RBI uses. Then we have reverse repo rate. Now, whenever Reserve Bank of India wants to control the flow of money or liquidity position of commercial banks, they are going to absorb the liquid assets of all the Reserve Bank of all the commercial banks at an interest rate. They will charge a huge rate of interest when the flow of money is high. Suppose if the money flow is less in the market, they are going to charge a lesser rate of interest. This is how the instruments of monetary policy are working. Am I clear with all the contents?
Ma'am.
Are you all following?
Yes, ma'am. Can you explain, ma'am, reverse repo rate once again?
Reverse repo rate means whenever Reserve Bank of India wants to control the money, because it is observing that this commercial banks are giving good rate of interest on the fixed deposits to the customers. Okay.
Okay.
Now, if if we are giving good rate of interest, higher rate of interest on fixed deposits to customers, more customers will get attracted. More number of people will come and deposit their money in fixed deposits with the commercial banks. Why this? What happened? The money with the commercial bank will increase because they are getting more deposits. And when the money increases, they will start lending. వాళ్ళు ఏం చేసుకుంటారు? All these deposits will be used for lending, right? So they will be very eager to lend more and more money outside. By this, what happened? The flow of money will be more in the outside. So what the commercial bank will do? Why are you lending them outside? We are going to pay a good rate of interest. That is how, by attracting a higher rate of interest, it will buy. And suppose if it feels that no, it is the flow of money is very low in the country, then it will reduce the rate of interest. This is all the techniques what the Reserve Bank of India is using to buy and sell the securities in the market. It attracts. Instead of giving outside, you give to us. We will give you a good rate of interest. That is how it is attracting the commercial banks. Instead of sending the money outside. That is how they want to control the flow of money outside. This is how they are using this technique. Okay.
Okay, ma'am.
Now we have done with all the concepts of financial market, stock market and all. We'll move on to the other aspect. DFHI, Discount and Finance House of India. This is founded in the year of 1988. It is also one of the active money market instrument actually. DFHI is going to work as one of the money market instrument which is being established as per the guidance of Wagul Committee. Now, the basic objective of this DFHI is to lend the to fulfill the short-term requirements of the participants of the money market. Whoever is in need of short-term loans, they can easily take loans from Discount and Finance House of India. So you can observe the functions on the screen here. It actively engages in transactions across all money market segments. Money market means short-term loans. Whoever is in need of short-term loans, urgent needs and all, DFHI plays an active role in lending to those people. So it is going to buy and sell the treasury bills. It is going to buy the commercial bills, certificate of deposits, commercial papers, to convert them into easy cash. So it is one of the instrument of money market where the short-term loans can be raised easily. That is about DFHI. Cash reserve ratio, we already studied. SLR studied. You can look at some of the points of defects of Indian market here. There is lack of coordination between organized and unorganized sector in money market. Unorganized sector is still dominating the entire money market in our country. And this is about Securities Exchange Board of India. As I said, the SEBI is one of the regulatory body of all stock exchanges in our country. SEBI is being established or set up on 12th April 1992 under the SEBI Act of 1992. Okay, its basic functions are how it is going to work. What are the objectives of SEBI? To protect the interest of investors. All the company investors who are coming to the stock exchange to buy and sell the securities, see to it that they are trading the securities on a fair manner without involving in any kind of fraudulent activities or malpractice. Yes, we are left with one or two topics under this second this thing. Right. Anyhow, we are done with today's time. So we'll wind up here and we'll continue with block 2 in the next class. Am I clear?
Yes, ma'am.
Yes, ma'am.
Fine. In block 2, we are left with only one or two topics more. Once we are done with, we are closing with block 2 and we'll start up with the block 3 concepts. Okay. So next class, we will discuss all of those.
Okay, ma'am. Thank
Thank
you.
you.
Okay, thank you,
all.
ma'am. Thank you.
Thank you.